Okay, let's do manufacturing from Limpopo 2023 September. Right, question 2. The information was extracted from the financial records of Swanepoel manufacturers owned by Valentine. The business manufactures one style of overalls. The financial year end 28 February 2023. All right. Remember, you have to note the date of year end is 28 February 2023. Right. Indicate whether the following statements are true or false. Write only true or false next to the numbers in the answer book. Okay. Wages of factory cleaners is regarded as direct labor cost. What is direct labor cost? Direct labor cost is the cost that is incurred for an employee who is directly linked to the manufacturing of the product that the business is selling. So, the cleaner is cleaning the factory. It's not manufacturing the overalls. So, it's going to be false. It's not direct. And then, the following one, delivery cost of finished goods to retailers are a selling and distribution cost. What is to sell and distribute? Is when you are selling and distributing, delivering your final product to your customers. So delivery cost of the finished goods to retailers, yes, it will be a selling and distribution. So that one is true. And then depreciation on office equipment is an administration cost. Okay, we have administration cost and we have factory cost in a company that is doing manufacturing. So depreciation of the equipment that is being used in the office, that equipment is not being used to manufacture the overalls. It's used in the office. So that's administration cost. It's not a factory. So we only consider those which are in factory cost to be considered as factory overheads. That other side. That is the opposite of administration cost. So yeah, this one is administration cost. That is true. Right. Now, 2.2, direct raw material. Calculate the following. The value of direct raw material on hand on 28 February 2023. 28 February 2023 is the last day of the year. So, meaning in other words, we need the value of closing stock. Using FIFO method. FIFO is first in, first out. What does that mean? The stock that we receive first is the first one that is going to be issued out. Right. Now, let's go and see the information that we have. Here is raw material information. Valentin has done a study of manufacturing process and determined that 1.8 meters of fabric is required to manufacture one overall. Okay. We don't need that information. Right. This is what we need for now. This is our closing stock here. This is the value of our closing stock. No. The number of meters. So we want to know the value. Our raw material is fabric. So now we want to know fabric is measured in meters. Ne? So now we want to know what is the value of this 4,300 meters in monetary. Right. So if we use first in, first out, it means that out of the raw material that has been issued to factory for production, we started by issuing this one, and then this one, up until this one. Right. So this is our opening. When we opened this year, we opened with 700 meters of raw material. And then in April, we bought 7,000 meters. In November, we bought 3,500 meters. In February, we bought 2,200 meters. And then the total of this is our total purchases, which is 12,700 meters. Right. So if we are left with 4,300, it means that we have to check where is this 4,000 coming from. Firstly, is the remaining. Bear that in mind. So if it's the remaining after we have issued everything, it means that it is probably, obviously, coming from the very last one, 2,200. And then out of the 4,300, 2,200 is from the February purchases, which was costing 48, which the total is 105,600. So it means that we are going to consider the whole 105,600. Right. But now, from the 4,300, we need the value of 4,300. From the 4,300, if we take out 2,200, how much is remaining? $4,300 minus 2,200. How much is remaining? Where is my calculator? It's 2,100. Okay, let me just put it in the calculator. Minus 2,200. Yeah, it's 2,100. 2,100. So where is this 2,100 coming from? Because why are we doing this? We are doing this because every stock that we have been purchasing have a different price. In February, when we buy our raw material, it was 48 Rand 1 meter. In November, it was 42 Rand 1 meter. In April, it was 34 Rand 1 meter. So meaning that different meters are costing different amount of money. I'm sorry for that. Right. So the 2,100, where is it going to come from? It's going to come from here. From the 3,500. So it means that we have literally used up this and portion of this. And then portion of this and this is what is remaining at the end of the year as our closing stock. Right. So now let's find the value of 2,100. The value of 2,100 is from here, which was 42 Rand each. So now you're going to multiply it by 42. And how much you get? 2,100 multiplied by 42. And then you get your 88,200. Then you're going to add it here, 88. $88,200. Right, and then you get your total, and of which that total is your answer of the closing stock. This is the value of 2,200. This is the value of 2,100. Together these two makes up the 4,300. And then together these two makes up the value of the 4,300. And then you have answered your first question. You got your 5 marks. Now let's go to 2.2. 2.2 is asking us, 2.2.2, the direct material cost for the production cost statement. What is a production cost statement? Production cost statement is the statement that shows you every single expense that happened in the production. Right, I got disturbed by a call. I was talking about the production cost statement, whereby you have your direct labor, you have your direct material, you have your factory overheads, every single thing that is included, any expense that is included in the factory. Right. Now, but for this question, we only need direct material cost that is going to be reflected in our production cost statement. All right. Now, when we talk about direct material cost in the production cost statement, we're talking about the direct material that has been used in production. That has been used in production. Right. So this is what you're going to do. You have your opening and you have your purchases and you have your closing. The closing is what we just calculated now. Let me just write it here. It's our 193,800. Right. So you have your opening, you have your purchases, which is total of this, and then you have your closing. So how much did you use? This is what happened. Let me just write here to say opening plus purchases minus the ones that we have used is equal to closing. You don't even have to memorize this. It just makes sense. Because what you opened with, you add what you bought, then that is what you have. Now you use something. After you use something, then you are left with the closing. You don't even have to memorize these, guys. You just have to understand. It makes sense. Right. So you have opened with your 21,000. Here it is. You have opened with your 21,000. And how much did you purchase? You purchased 490,600. Here it is. And it's your purchases, ne? Is your total purchases. Right. $490,600. We don't know how much we used. That is what we're looking for. But after we have used, we are left with the closing stock. This is your closing stock that we've just calculated in the question above, which is your 193,800. So now it's easy for you to get the used, né? It's easy to get your used. It's just this plus this minus this. Then you get your difference. And then your difference is going to be how much? 317,800. 317,800. Okay, let me just write it here. Three, 1, 7, 800. Right. You can also, let me put it in brackets so that you can see that it is being deducted, just in case you want to prove yourself this plus this minus this, if it's going to give you this. Right. Let's move. Now we are going to our 2.2.3. Calculate the number of meters of raw material fabric that was wasted in the production. Right. Remember, there is something we call normal loss. When you are in production, it's not everything of your material that is going to be within the production. When you cut your fabric, remember when you buy your fabrics in pallets, in meters, then you still need to cut it to your measurement of the overalls. So when you cut it, there's going to be those small pieces that you're not going to be using them in the production of the overalls. So those little pieces, they are your normal loss. It's what you have lost or you have wasted in the production process. Right, so now they want to know, the examiner want to know how many meters was lost. How are you going to do with this now? You are going to check how many meters was issued. Okay, let me erase this so that I have enough space here. Right, these are the meters that have been issued. And then if these are the meters that have been issued to manufacturing, now you have to check your opening work in progress and also consider your closing work in progress, and you check how many meters have been actually used in producing the total number of outputs. Right, here is our work in progress. As overalls are produced to orders, there are no work in progress balance at the beginning or at the end of the year. What is the examiner telling you here? There is no work in progress, so you don't have to worry about it. Right, so now we are going to consider that information that I said is not useful for now. This information over here, which says Valentin has done a study of the manufacturing process and determined that 1.8 meters of fabric is required to make one overall. Right, so if 1.8 is required to make one overall, how many overalls did we manufacture? Here is the information that is telling us about production, sales, break even. So this is number of units produced. 4,000 units. We produced 4,000 units. So if we produced 4,000 units and 1 unit is 1.8 meter and we have issued 7,875. Okay. We have issued raw materials to factory for production of overalls, and we have issued 7,875, and there's no work in progress at the beginning and at the end of the year because we only produce when there are orders. So whatever we produce exact number and then off it goes to the client who ordered. Right, so if one overall, for one overall we use 1.8 meter. So how much did we use for 4,000 overalls? 1.8 multiplied by 4,000. We used 7,200. So this is the exact number of meters that went straight into the manufacturing of overalls. But we have issued this number of meters to the production. And out of what we have issued, we only used 7,200. And we are told that there is no work in progress remaining. It means that the remaining is a loss. Because if you can see here, we have issued more, 7,800, and we only used 7,200. So how much did we lose? Is the difference between the two. 7,875 minus 7,200. Then you get your 675. Then it's your answer for that question. Right, now let's go to direct labor cost. Calculate the value of direct labor cost that would appear in the production cost statement for the year ended 28 February 2023. Remember, I told you that when we talk about production cost statement, we are talking about your direct labor plus direct material, and then you get your prime cost, and then you add your factory overheads, and then all those expenses that are involved in the factory, and then now you get your total cost, production cost, in your production cost statement. Right. Now, let's see the information that we have. Salaries and wages. And then when we talk about direct labor, we're talking about those employees that are working in the production process. That is direct labor. Right. So, this is the information we have here. We have employees, 5 employees, each of them earning 5,000. And you must be very much careful, ne? This is a monthly rate. So meaning that you still have to multiply by 12. The examiner sometimes can give you an annual rate. So you have to be very much careful of that. And then, so far, we know that we have to say 5 multiplied by 5,000 multiplied by 12. And then you're going to get your basic salary. 5,000 multiplied by 12 multiplied by 5. You get your 300,000. Right. And then that's not all. Because when we talk about direct labor, we talk about each and every single expense that the company has incurred to do with the people who are directly involved in the production process. Right. So, there is still overtime here. 180 hours per worker. And every hour is paying 70 rand. And this is for an annum. Annum is a year. So now, meaning whatever you get here, you don't have to multiply by 12 because already it is an annual. Right. Then, now you're going to say your 5 employees multiplied by 180 hours multiplied by how much per hour? 70 rand. And how much do you get? 5 multiplied by 180 multiplied by 70. You get your 63,000. Right. Is that all? No. We have other information here. All employees are registered with the pension fund and the UIF. Deductions are made from their basic salary or wage as follows. Pension fund 8%, UIF 1%. You don't need to use this information because this information is what is going to be deducted from the salaries or the wages of the employees. And now we want to know what has costed us, the company, the manufacturing company. So this has nothing to do with us. Now, the second bullet, the employer contributes, now we are talking about us now, 10% towards the pension fund and 1% to the UIF, right? Based on basic salary. This is very much important. Based on basic salary. Basic salary. This is your basic salary. So, basic salary, we are talking about the salary that either the employee has worked overtime or not, that is what they are going to get. So, we don't consider this one. So, if the examiner didn't say basic salary, they said total salary, then you were going to include everything. So now the examiner is very much specific to say basic salary. Basic. So, right. Now we have our 5 employees. Okay, but this is going to be a length, right? Because now we already know the total for all the employees is 300,000. So we are going to say 300,000 multiplied by 10%. And you get your pension fund contribution. Then when you multiply by 10%, you are going to get your 30,000. Right. And then the UIF, they told you is 1%. So you are going to say 300,000 multiplied by 1%. And then you get your 3,000. And then you total everything here. Then let's total everything. It's 300 plus 63 plus 30 plus 3. You get your 396,000. That 396,000 is your direct labor cost that is going to appear in your production cost statement. Right. Let's go to the next question. Calculate the total production cost of one overall produced. Right. Now, they said the total production cost. But after you get your total production cost, you still have to divide by 4,000 because they only need how much is it for one overall. Right. Total production cost, now we're going to be talking about your direct material, direct labor, and factory overheads. So already now we have calculated our direct material from the above question. Our direct material was calculated as, how much was it? It was 317,800. And now we have just calculated the direct labor. We calculated it to be 396,000. Now we need our factory overheads. Let's see the information that we have here. Factory overhead costs. Okay, it's good that at this point in time you just have them already here, unlike at times where they're going to be giving you depreciation and you have to calculate depreciation and differentiate the ones for the factory, the one for the admin, and all those things. So on this question, the examiner had justice and gave you the simple calculations here. You have your admin, which is 80, and then your factory overheads, you don't know. But when you add this together, they give you 350. So it's much simple. You're just going to say 350 minus 8. Right. 350, 200 minus 80,000. And then you get your 270, 200. Your 270, 200. Right. Let's take it up there. And then we take it up there. $270, $200. Then you get your total production cost. Let's add this together. 317,800 plus 396,000 plus 270, 200. You get your 984,000. That is your total production cost. But now we want to know how much is it. The examiner wants to know how much is it per unit. So you are going to further say 948,000 948,000 divided by 4,000. And how much you get? You get your 246. That is your production, total production cost of one overall. Right. Alternatively, I just like to do the long dry so that everyone can understand, even those who are not really there. So, alternatively, in your answer book, you can just say 317 to avoid a lot of steps. 317,800 plus 396,000 plus 270, 200 divide by 4,000. And then you get your answer 246. The examiner is going to give you full marks. Right. Now, what is the next question? Comment on the control of direct material cost per unit and direct labor cost per unit. Code figures. Provide 1 point for advice. When you comment, obviously, you're going to be comparing previous year and this year. Okay? So, let's go and check. Okay. This is where we're going to be working on. They said direct material cost, direct material cost and direct labor cost per unit. So this column here are cost per unit. This column here are total cost for this year. This column here are for last year. If you can see the years on top here. Right. So now let's get the direct material and the direct labor cost per unit. Our direct material cost, we have calculated the total to be 317,800. And our direct labor, we have calculated it to be 396,000. And how many units did we produce? We have produced 4,000 units. So let's get per unit. 317,800 divided by 4,000. This one here is 79.5 17.45. And then the labor, 396,000 divided by 4,000 is 99. Right. Obviously, we're talking about the rents. Right. Even this side, we're talking about the rents. Very much important when you do manufacturing, because at some point, you're going to be talking about units. At some point, you're going to be talking about rents. So, you can also prove this by adding them together with the one that was given, the selling and distribution, and see if they're going to give you this amount. Let's see. 37.5 plus 99 plus 79.45 is giving us 215.95. That's correct. Now, let's start commenting. First thing first, you're going to quote your figures. Last year it was 63 rand 30 cent. This year it's 79.43. That is an increase. So you can calculate and get the difference, 79.45 minus 63.30, and then you get your 16 rand 15 cent. Then you can tell the examiner, direct material cost increased from 63 to 79 by 16.15%. If you want to show the examiner that you know your story, you can even do a percentage. Then you can say 16 rand 0.15 divide by 63.30. Then you get your percentage, which is 25.5. So you can say that the direct material has increased, the direct material cost per unit has increased by 25%. So what can you say as an advice? You can say they can train their staff to avoid waste, because now if it has increased, chances are that the 600 and something units that we have calculated, remember, for the waste, it might have contributed to that. They can look for cheaper material, because when you check, so they can look for cheaper material as well, because if you can check, let's just go and check up there. Every time when they buy material, okay, when we opened with material that was costing 30 rand. In April, we bought material costing 34. In November, we bought material costing 42. In February, 48. So you see there is an increase. So why don't we look for the material that we bought for 30 rand, or at least 34? So yeah, it's some of the advice that you can give, and any that you can think of. Right. Now let's check the direct labor cost per unit. It has also increased from 82 to 99. By how much? You're going to calculate the difference. It's 16 rand 80 cent. And then in percentage is 20.4%. Then, what can you say about this one? We are talking about direct labor. So, maybe the supervisor have to be careful. They have to be supervision have to be intensified, so that they must be productive inside that. Surely we may not need to pay for overtime, because when we pay for overtime is because we are not producing accordingly. They might be on go slow or something like that. So train our staff. You can think of any that you think is affecting the salary. There's no right or wrong answer, as long as it's affecting any point that can affect the increase of the payment, the direct labor, what the company is paying to our employees. Right. Let's go to the next question. And I think it's the last one. Yes, it's the last one. Right. Valentine want to increase her profit by 40,000 in the next financial year while maintaining costs. Okay? So, whatever expense cost that we had, we're still going to be maintaining them as they are. And then calculate additional units that must be produced to achieve this target. Now that you have additional profit that you want to make, obviously you have to produce more units. And then, so that they sell, and then you make additional profit on top of what you are making now. If you still produce 4,000 at the very same cost maintenance, it means that you're still going to make the very same profit. So if you need to make extra, you have to produce extra. So how much is that extra? Right, this is how you're going to go about it. We have something called contribution per unit, how much one unit is producing. And when we get to our total cost, that we are talking about maintaining the cost here, we have fixed cost and variable cost. When we talk about fixed cost, we are talking about that cost that doesn't change. Whether you produce or you don't produce, whether you produce 2 overalls, you produce 100 overalls, that is still going to be the same. What, for example, your electricity. If you switch on your lights for 1 hour, whether you have produced or not produced, you're still gonna pay that amount. Your rent. If you're still gonna pay rent, if you are using your factory, it's 10 square meters. If you produce less items, it doesn't change your factory size to be 2 square meters. So it's a fixed. So that one we're not going to be considering because it would have been covered already by the previous one. So now, when you produce more, there's also variable cost. Ne? When you talk about variable cost, we are talking about that cost that varies with how many units you have produced. So, variable cost, if you produce 10 units, it's going to be equivalent to 10 units. If you produce 15 units, it's going to be more. If you produce less units, it's going to be less because it varies with the number of units that you produce. That is the meaning of variable. It varies. Right. Now let's see. How much is the variable cost? 215. So with that being said, it means that when you produce additional items, we're going to have additional variable cost. The fixed cost is fine. It's already been covered with the previous profit from the previous manufacture, the 4,000. So now, let's talk about 215. And then, we're also going to talk about your selling price. Selling price per unit is 350. So if we are selling 1 unit for 350, and 1 unit is costing us 215, how much profit are we making? Then you're going to say this minus this, and then you get your difference. How much is it? 350 minus 215.95. You get your 134.04. 134.04. So every item is giving you 134.04 of profit after you have covered the fixed cost on the previous production. Right. Now, what do you do with that 134.05? How many 134.05 that you need to make 40,000? That will tell you how many number of units you need to produce. So, you are going to say your 40,000 divided by 134.05. And how much do you get? 4,000 divided by 134.05. 40,000, not 4,000. Right? 40,000 divided by 134.05. Then you get 298.39. So, you cannot have a comma 39 of a overall. So, meaning that either this one, the number here is less than 5, you still have to round it off to the nearest unit. So now you're going to have your 299 instead. So your final answer is going to be 299. So she need to produce 299 additional units to make additional profit of 40,000. Alright, easy stuff, ne? And we're done with manufacturing.